Charlotte, Cordelia, every single human being. Good morning, good morning. We are recording, we are live in theater. We've got it all hooked up. I apologize for yesterday. I had spent probably a good 40 minutes or so trying to get everything up. Hold on. There we go. And by the time I got everything back up again the final time, I was like, oh wait, every single thing is down. So my priority always is going to be if something goes offline with my VPSs, since remember that's where I manage the most amount of real capital, I've got to get re-access to those. Like that is always 100% the priority. So I had some access on some of them on my laptop, but I was just signed out of everything. So not only NinjaTrader to back up anything I was doing for futures, but also any live capital or professional capital I could not access. So never want to be in that position, not because it's going to be the end of the world, but as we know, one wild thing happens during a moment when you have no connection or accessibility, and then you kind of have yourself in a rough situation. So that's what I was doing yesterday. And I've got most of my browsers are up today are Brave. So I don't know if it's going to be heavier or lighter on my system. I did do a lot of research on that yesterday, but we're going to find out. I went to go buy the new studio, but they told me again to wait until the release comes out, which I guess now is supposed to be April. They were like, no, for what you want, trust me, don't buy this one. Just be patient. I'm trying to be patient, but I'm annoyed with patience. So we'll see how all that works over time, I guess. But on that note, Miss Barbara, can you pretty please check our hearts and then we will get started?
Yes, I will. Father, in the name of Jesus, Lord, we come before you, Father, thanking you, Lord, for all that you do and continue to do in our lives, Father. We thank you, Lord, for favor. We thank you, Father, for your wisdom. We thank you, Lord, for all the gifts that you've given us, Father. We thank you, Father, for your mercy that endures forever. We thank you, Father, that it is you who gives us the power to get wealth. And we thank you, Father, for your guidance today, your protection. We thank you for your Holy Spirit. We thank you, Lord, for all that you do. We give you praise in Jesus' name. Amen.
Amen. Amen. Amen. Amen. Speaking of which, we got to get together for some of the dragonfly stuff here soon. I know you weren't feeling good and then I was traveling, so let's get
Yeah.
all that stuff hooked up. Um,
Okay. Yeah. Maybe we can talk this weekend.
that'll work. That sounds awesome.
Okay.
All right, ladies and gentlemen, it is 5 minutes till market open. There's a lot to kind of go over. First and foremost, I'm starting another Dragonfly account with a smaller amount of money that I'm going to put Dragonfly on and the indices copier on, just to show what can be done when you're not over risking. I likely will because it's such a small account, like I'm thinking $300 to $500 a month, kind of to treat it like a real investment vehicle, right? And adding money because of where I got in my trading career was never something I did. But from a real investing perspective, that is, the secret, right? That is the direction to dollar cost averaging. Like all you're doing is stacking benefits on benefits. So I'm very excited about that. We just hit like a total of over 500% on the indices copier, all documented, which is amazing, right? Over time, not perfect. There's no such thing as perfection. So that's kind of awesome. Some of the tools and the development there on tech stuff is very laggy still. A lot of stuff coming up. So I'll talk about that here shortly. But first, let's spend the next 4 minutes talking about what we see in the markets. Obviously, don't trade what you can't afford to lose. And if you're buying any prop firms, we've got Trade Day, Alpha, Apex, Take Profit Trader, Blue Guardian, Lucid. Use code 6FTC. I also started using ChatGPT and some other different methodologies to find out what's the best dollar for dollar long term. And Alpha, Trade Day, Lucid, in the big picture, like until you get to live, you're going to get more dollars out of them potentially. So once I have that added to my little brain dump spreadsheet and a couple of other things that I'm working on, I will be releasing it. But I want you guys to know the math. And mind you, the math is always changing. That's out of my hands. But the math is what's important. So 3 minutes till market open. Guys, we've been in this level since God, last year. So I'm going to go to the daily. And I guess today's one of those days where I would say I'm not even as concerned with the big picture because we're going to have to trade what we see. Bottom line, this is all the way back in last August. We kind of stuck here, 2024, March, big move, April 2025. Since then, we've been really just holding this level. We can't seem to get below those 23,000s. We're kind of trying to get 25,000s. We went really nowhere since October of last year. We go up, we go down, slightly less up, less down, slightly more up, slightly more down. And all we're doing is kind of in this awful looking channel. So that's on the daily. 4 hour time frame is not much different. It's just a smaller view of the same story. We are sitting above yesterday's closing price. So at the 822s, we're somewhere around the 800s now. Obviously, I'm going to be targeting those 770s. I'm targeting kind of that overnight gap. We also have the midnight open for those of you ICT, SMT people at 790s. So I still think even if our direction is up on the day, I would like to pop down. So figure 820s down to 760s. That's 50-ish points. Okay, by the time you get in, a little bit late, a little bit early, blah, 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 it's 50-ish points. To me, aside from any levels that the market tells us or prints with 2 minutes left on our timer until market opens, if we're holding above 700s, I'm probably only looking for buys today. So if we're getting below 700s and staying below, so think at least a 1 5-minute chart, full body closes with retests, I think there's a lot more big picture to the downside. Now, that doesn't mean it has to happen today or this week. Remember, we had the huge sell-off last week. We had Thursday, and then we had another one the following Thursday. So are we going to climb up today being Wednesday and then come back down? Because we also have this nice little imbalance here. So if we're buying, hold on, let me go to another template too to see what's about. A lot of little imbalances to the upside. I'm going to go up a time frame. My targets are, which I don't think we're going to hit. That's too big of a time frame to get those levels from. On the upside, we've got 980s. Okay, I like the 980s. There's our 4 hour kind of level. And of course, beyond that, we've got kind of the extended trading range high at the 25,000s, but we're holding below it right now. So obviously, I'd like to see this area get eaten up, 25,300s all the way up into here. But really, it's going to be a let's wait and see. Let's see what the market does. Let's see what the market gives us and go from there. So now, turn back on all my mess, go down to the 5 minute. It is market open. God, that was perfect timing. That was perfect. Nice wick to the downside, but no follow through there. I do want that out of my way. If we can get back above the 825s-ish, I'll be looking for the longs. Otherwise, this is hard because that's the move I wanted. And now it's happened. It's done. We're not chasing it, obviously. And I don't know how much more follow through we have here. I'm on the 5 minute. We just killed midnight open. This is also a 50% of the high to low, and this is the 50% of the low to high, this area. So I'm thinking we sweep down into here, and as long as we're holding this level, I'm still looking to kind of try to buy up, but we'll see. 760s, that's a nice little pop to the downside. I've got up my Apex, which is going really well again. I have all but the one account I have to rebuild, so that's always a good time. I would literally almost bid that level. We just beautifully tapped into it. No confirmation there, but we closed that overnight gap and we got a lot of bullish pressure potentially. I want that out of our way. Beautiful. That's pre-market low. And we're trying. If we can get back down to kind of 770s, I don't want to just buy blind. I hate that because I don't think it's a very confirmed entry, but I think it'd be easy to get a 30-point pop. But also remember, it's hard to kind of go right now. Our pressure is to the downside, so I'm going to be patient and wait and see. Today is brought to you by a cup of warm coffee because I am freezing to death. And it has lament in it, LMNT, if I'm saying it right, for electrolytes. I've been completely geeking out on all things biohacking. The next one is going to be like the brain training device, and then the one that's supposed to help with your vagus nerve, and then this like deep red thing that you use methanol blue, and it's like a cure for everything. I was on the phone with Rosie yesterday, and she was like, "Oh my God, Mom," she goes, "You just need to go to a lab." He goes, "You need to teach them a thing or two because I got like 5 or 6 people into Restore trying to cure all their things with oxygen." And yeah, that's where my brain is at today. I'm trying to figure out how I can age like a jellyfish. Oh, I like that.
You have to do that thing that that guy's doing and inject your daughter's blood.
That's Brian Johnston. So like I didn't even know that he was doing that. He's using the stem cells and the platelets from his son. But they found out. So wait. I know it sounds grotesque. And again, I'm not a fan of some of his craziness. His craziness is wild. Like he does some wild things. However, because he's doing the research on that, he now knows that yes, of course, the youth is a little bit stronger in terms of those stem cells and the human growth hormone and blah 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 blah. But the reality is because of the interactions, it wasn't like a statistical difference. And we would have never known that. So think about how many people target the youth and think that that's the only way to accomplish the goals that he's trying to accomplish. Brian Johnson is crazy. I follow a lot of biohackers. Okay, that's our breakout, guys. But him, he's on the extreme end for sure. I'm not in anything yet. I like it. I just want a little bit more. Even just retested the halfway back. So again, that's still gonna be 780s. 780s-ish. I don't know if we're gonna get it. But Brian Johnson's crazy. You guys should look him up. He tests everything. Everything. And he's a big advocate of that device too, the Senset, which is you put it on your chest and supposedly it helps uh it taps into your vagus nerve, which I think is phenomenal, like for rest and everything else. I just can't pick one of the devices that like hooks up to your brain. The one that I really want is stupid expensive, and the app is stupid expensive, which I think is stupid to spend that much on a device and then also have a $30 a month subscription on top of it. Like if you're going to pay a premium, it shouldn't also come with that. But it looks to be the best by far. It's much better than the Muse. So that's what my mind has been doing. Just geeking out. Geeking out for sure. Hey guys, I wanted to buy, but we're not seeing it. I missed the sell. I would not have sold as we retested here. I would not have sold back down. Not to say we can't come back to some more. Because from the high to low, guys, we could still come all the way down to the 650s, but really I want to hold, as long as we're holding the 700s, I'm looking mostly for buys. And there's tons of imbalances all the way through here. So we close the overnight gap, which is phenomenal, but that's that pop back up. But we're only at 50% of the way there on that candle. I'm still flat on all the things. I would be tempted just to buy this level because from this area, this is the 79%. It's also the projected hourly and 4 hour levels, and it's the overnight gap. But we already got that 50-point bounce from that. So I can't necessarily target that in the same way I would as a level. But also, I've got a lot of selling pressure, which still brings us down to the 700s, which is 70 points away from where we're at now, and then 640. So 5 minute time frame, that's a very bearish candle. This next candle has 3 minutes left, so I want to see how this next one closes. But we've already retested half of that. So whatever we're going to do, I think it's to the downside. It looks like we're going to try to push at least one more level to the downside, which is on average maybe 50 to 70 and as much as 150 points down. So I'm going to be patient. Try to. That's my goal. Anybody else see anything else on that I'm missing or have an opinion on? I want to short to Asia low. Asia low, what is that? That's here, right? The 700s. I kind of do too. Like I want to. I just we're at this imbalance. 24, yeah, 700s. That's not a bad amount of points. That's 70 points. So it is enough to kind of get your profits. And I like it. But I still have the 640s too. So if everybody wants to buy this up after last Thursday's huge tank, very easy that this is the direction. Right now, we're still sitting in the range. So have we, I hate the idea that we've missed, some of it, but if I had taken JGS prior to open, this would have been done, right? I would have had my points, 820s down to 750s. That's plenty of points. I'm done. Depending on my size, like I literally don't need any more than that on the day on most of the accounts that I'm trading. So JGS prior to New York Open, perfect. But as of after New York Open, we've gone nowhere yet. We've came down to close a gap and we've got no concrete direction. If we break below kind of the 770s, maybe we take the short down to the 700s. So now we've got this push back up. I want to be concrete, and I don't feel like either direction is super concrete today. There's just so much room on both sides. ATR candle straight back up that kind of is cashing every single thing else. So are we going to come fake out the buyers? This, remember, is the halfway back from that high to low, the bigger position. So we're holding this level. Like we have failed to get above. But I think buyers, the market really wants to see 25,000. So I don't know if we're going to pop to 25,000 first and then drop. I'm thinking we drop first and then go up. But I'm going to take either direction. We shall see.
Yes, a lot of indecision right now. At that daily level, pretty much we've been sort of going down and then rejected back to the mean of that area. So now it's like you said, it could go both ways. It hasn't really held any of the lows that it's tried to make. So there is a possibility that it may possibly want to pop back up again. But again, it's just indecision. So should we just sort of wait, or you get your small scalps here and there when you're in profit, protect?
Nah. A lot of the hedge funds, not sorry, a lot of the prop firms are really buckling down on the hedging thing. So for me, I've been thinking a lot about it. Obviously, I think going for those 20, 30 point pops is a really easy way to trade. Your stop loss is small, your emotional and time investment is small. It's a lot easier to catch a 10, 20, 30 point move than it is the bigger direction, like for this side of the market. And I would remind myself and everybody else that on the other side of the market, I was averaging high 80s and 90% accuracy kind of intraday swing trading because I'm good at the direction of the market on the big picture, not the chop. Like I can wait, but so that notwithstanding, I just think the copy software still has too many limitations. So like I was in the chats with Lucid last night saying, okay, so what is they were kind of cocky and doing the macho man smack talk thing to everybody who was fussing about the hedging thing. But my question is what is their policy going to be? Is it going to be like take profit traders where and legend, you just get the whole account deleted, right? Or is it going to be like Apex, like, hey, you lost the profit on that day, but and you get a warning, but like you're going to keep the account. So um we'll see. We'll see. Because right now the trade sinker is holding out really well. I still can't decide which methodology. We're still below the VWAP, but we're getting that pop. That's the buy up. But if we're seeing this, so is every single person else. We want to go to 25,000. Let's see if we can get some momentum before I enter. I'm looking to buy. I'm not going to buy yet. I'm really want to see how this candle closes bare minimum. This is a 1 minute candle, so not ideal. There's no real confirmation on 1 minute, and we're still below the VWAP. But I would give it about 45, 50 points as a stop loss. Another wick of rejection, so no buy yet. Hold on, let me go to another time frame, but then I'll talk more about the hedging thing. Anyways, the software is performing well enough. I just can't decide like which methodology is gonna have less glitches. And then remember, the glitch is not very often. It's once in a few weeks, It's once on big market stuff. We like that. 890s. I don't like all these wicks off that VWAP, so I'm gonna be a little bit more patient, which might mean I missed the move. I want it, but it's okay. We like that. We're getting there now. Entering in on my Apex accounts, which really are just my bigger accounts. It's a late entry for sure. Let's see, we've got 880s as a target. Make sure I'm on the right contract sizes and everything. So back to copy software, I don't know which limitation is better. So for example, if I'm taking 2 on the one at my master account, and I multiply on the followers as like 2 times the quantity, if that creates less of the hedge at kind of this spread at close, or if, for example, I take the biggest account and just do like one one mini, and then have the other ones be again, the other accounts be a larger volume, or what the methodology is going to be to have less of the, hey, there was a slight millisecond in change between where you opened and the other one closed, so it looked like a hedge. I don't know which process is going to be less problematic because they all have a little bit of a problem there. She's trying. Doesn't look like much, but that's 10, 15 points, easy. I like that 880s. Stop it. Oh, that was a nice drop. Trying to fake every single person out. That candle was lovely. Lovely. But L, the copy software limitations, I do some research on TradeSyncer and then the Ninja Trader version of Affordable Trading Tools. They're mostly adequate, and notice my word choice is adequate. Like they're not horrible, they're not exceptional, but with prop firms, it's one little glitch, and it will cost you the account, right? So I don't know which methodology is going to be best in terms of how I can kind of alter the contract sizes and or exits on different accounts. So limitations for sure are the inability to kind of trail your position, because as you read up and the more I read, you technically are not allowed to drag this into profit, right? Technically speaking, you're not allowed to take this and drag your stop loss into profit. You're supposed to rather, I don't know, because I've read about it 100 times, like drop a new order and then delete this order. And then of course trails are technically forbidden. All the softwares allow kind of, even Tradeovate Copier has an option to have one account be taking 3 contracts and another account be taking 4 contracts, et cetera, et cetera. But it doesn't matter if when that happens and the order closes on one and they misread it, the 2 to 4 kind of thing. So the other account kind of opened at, let's say 2, and then it realizes the mistake and it closes it. But that's enough to break the system. So 850s, I'm going to close that out at about 31 points for some of that. Well, I should have closed it out at about 30 points. See? I'm trying to get it a little bit closer. It's 30 points-ish. Close. We'll see. I'm waiting. I mean, at this point, all I can do is hold. I can exit, but for now, I don't have a big reason to exit. We can kind of still pop in, preferably as long as we're staying above that kind of yesterday's price. So it's about 52 points away. Figure we don't want to close below the 769s, and then I would be holding. But we could very easily just wick there, knock every single human being out, and then go the direction we want to go. That's looking like how it wants to do it. So we'll see. But anyways, back to Lucid. From what I've read, they're going to operate comparable to Apex, meaning if you hit the hedge violation, you don't lose the account. You're just going to lose the profit on that day and then get a warning. Obviously, if it's something that happens regularly, you're going to lose the accounts. So that seems to be the process.
Yeah, that's a little bit more fair as opposed to just totally losing the account off of something that was an obvious, technical issue or malfunction or whatever the case may be. I get the hedge and the reasoning for them monitoring it, but if it's obvious and someone can submit an appeal that is that's acceptable, that's honest, then I don't understand why the accounts can't remain. It's real stupid.
That's like, so remember when I was doing Take Profit Trader, I wasn't copy trading on external software. So I was doing really well. They were by far my favorite. But as I expanded this into other forms, obviously, guys, I got stopped out with 53 or whatever. So some odd amount of points, maybe 45-ish points is where my stop loss was since I didn't alter it. We are got above the VWAP. We retested. Again, I should have moved my stop loss all the way down here to the 760s, like I said, but now I'll wait. So I took a little loss, nothing major. Now we'll kind of wait and see what sets up next, because that's a big old 30-minute doji, and we've got 10 minutes left on this 4-hour candle, 1-hour candle. To close bullish, we need to push up a little bit more. And I don't think we're going to close with that big of a bearish. We could on the 4-hour and still maintain a wick. So now I'm going to wait. That was not the big pump that we were wanting anyways. Now, should I have protected? I had multiple opportunities, absolutely, but I did not. Again, sometimes it's your behavior that's wrong. We were up 30 some odd points more than once, but even with my later entry, up 30 some odd points more than once, and I failed to protect, which is a behavioral thing. That's a performance thing on my end. But anyways, the Lucid situation, yeah, I was in love with Take Profit Trader, but as I expanded my growth, I could not maintain the accounts, because remember, if I'm going slow, I'm taking 2 or 3 weeks to really fatten up that account. And then within the 3 to 5 week period, you almost always have some kind of, well, if it wasn't a personal thing, because we're human too, it'll be a technological thing, and then all the accounts are gone. And that just kept happening with Take Profit Trader. I think the last time I counted, I was at 8 or 9 Pro Plus and Nor Pro accounts just vanquished, gone, all the buffer liquidity gone because I broke that violation rule. And that sucks. And that's the same reason why I haven't done as good on Legends either. So every other platform I've done pretty good on. Took a while kind of getting in the groove of things, but Legends, number one, they have the daily consistency thing, which just means it's hard to make it up that day. Obviously, it saves the account on a medium bad day, sorry, on a huge bad day, but I don't have a lot of those. I have medium bad days, right? So on the completely gremlin days, yes, that's a saving grace, but on your average bad day, all that does is make it harder and harder and harder to grow. And they delete the account with a hedge. I would build it up really slow, plus get knocked with the consistency stuff, and then I lose the account. Build it up really slow, knock with the consistency, and then a hedge comes in 4 weeks later, and the accounts are all gone. All gone. And if you're holding a position on that account, on Legends, they just delete your account. Like, it's not like other firms where, hey, you had a pending order, an open order or something at 4, whatever their time is. It's kind of unique to other firms. They just delete the accounts, like they're just all gone. Okay. Okay, I hear you. Not fun, but I hear you. Okay, I'm gonna look at the bigger time frame now though, because here's the dealio. I'm gonna turn off all of our stuff. 30-minute time frame, we're looking like we're gonna close with a bullish doji. We've officially filled that gap. The next candle that opens up here in about 8 minutes can push down first, and then of course give us that buying pressure. The 1-hour candle is obviously a bullish doji, and then the 4-hour has a lot of room technically in 8 minutes to kind of push down. I figure that's 50-60 points down. And then of course that next hourly candle, 4-hour candle, can come to the downside before it goes up. So just some narratives to consider there. Otherwise we're pushing back up. I'm tempted to try the long again. There's no real clarity there. $880s, 860s. We get back above the 860s. I mean, I'd be really confirmed on that buy. That's an open candle though, with a minute left on it, a minute and a half left. The safer one would be to wait kind of the 880s, knowing that we can easily kind of tap into the 950s, which is 60 some odd points up. But look at that vectoring we're seeing, which the barcoding and vectoring. So that's just not a huge bullish confirmation. So if we take it, I've got to be more concise about, hey, no, we're protecting that trade. But we hang out, we wait. 6 minutes left on this hourly candle. We're pushing up right now. We are kind of taking out that previous candle. Mind you, this next 4 hour candle can do a lot of things. So that's a 50% of the 5 minute range is now being tagged, has hit once and is now getting ready to hit a second time. I think you're confirmed on the buys. I think 940s is going to fill that gap, this little bit of a gap we've got. And of course, we've got 25,000. So you've got enough of a reason to be in a buy. But just know it's a risky play. That's an ATR candle. It's an ATR right up. So figure 50% of that ATR candle. That's 25,000. Just don't want it to come back below there. That's 70 some odd points. This time we're gonna need to protect. And we've got 25,000s, which we may or may not hit. Let's try this long again. Five-minute is just now confirming to be bullish on the MACD and of course the chop zone too. But it doesn't mean we can't pull back down. We can pull back down a decent amount and still be bullish. So that stop loss might need to be a lot looser than it is. Now let's see. 88s to, that was our first 30-ish points. I really want to kind of get above this 920s. That's up 20 points and going. I entered also on my 50K accounts, but not on my 25K accounts. Mostly because if I want to add back in, like I don't want to have, since I'm trading with such a small size on those 25K accounts, I don't want to have that many contracts on that big of a stock. That's 40 points and going. Let's see. I'm gonna go ahead and lock at least half of that because this is lagging. It's gonna knock out at least half. Ew. Just push up to that 940s. At least come fill this gap real quick. It'll be a 60-point trade on just that one contract and then the other contract. And what I'm doing on Trade Syncer is this one is taking it at 2, the other ones are following in at 4. That gives me 4 for the amount of available drawdown, 4 micros on very large accounts. So it's not outsizing by any means. It's being very fiscally responsible. That's that first one done. I still think, but 940 is easy. And then of course, if we break the 962s, I'd expect a 10, 20 point pop to the upside, which doesn't quite bring us to 25,000. So can we get the aggressive 25,000 point move to the 25,000s? Yeah, but it might be a little bit big of an ask. There we go. We've now officially filled this little imbalance, so we're probably going to take this plus 10 to 20 points, which might not be enough to get us over there at the 25,000s. I don't know what just happened. Perfect. She's going. I do think we just hit the 4 hour high though, which the typical overshoot of that is going to be 980s. So can we hit all the way to the 980s and then get a little bit of pop down before we hit 25,000s? Maybe. So I don't want to give back all of that. 880s, that's an 80 point move from here. Wait. Plus, this is the end of that candle, so we've got a couple seconds left for this 1 hour and 4 hour candle close. Just made equal highs, really. Well, that was smooth. We made some monies. Over 80 points on that trade. The other one moved 30 some odd points in our favor. I failed to protect. That was wrong on my part. Again, that's behavioral, that's performance. That is part of the process that we kind of have to call a spade and kind of recognize the behaviors that we do for whatever good reason we validate them with. We like it, and she's going. She's still going. That's 6. It's nearing 80 points still. 80 points in profit and going. Simple. Trading is much simpler than we make it seem to be. Much, much simple. Is anybody in this? Anybody holding? How much are you up? Where was your entry? Could have held this one better, failed to do so. I could have, two things I could have done better. A, put my stop where I said I wanted it, which was kind of below this level. And B, I could have protected some of that profit when I had the opportunity to. And then at least if I had taken the other contract as a loss, that would have been fine because I would have taken half of it off, but I did not. So those are the two things I could have done better on this trade. Otherwise, 30 some odd points in profit and then came back down, wicked you out. And then here you go. Move is good. I'm glad I didn't get sucked into the cells trying to take those lows. I do wish I would have taken the JGS out of the gate though, because that's 70 some odd points, which would have been straight to my target. We're up 90 points and counting. These are my 150Ks. These are my 50Ks. I'm still going. Might even hit 520s, but I'm not willing to give that much back. This hasn't picked up the trail yet, so I'm going to go ahead and this one is not. The second order doesn't have a trailing stop on it anymore because I think that's what's causing a lot of the errors and the bugs. So I have to manually kind of kick in, which is probably good too because it's allowing me to capture a little bit more. So good in some ways, bad in others, I'm sure. We're at 90 points, nearing a 100-point move. I'm not going to give that much of that back. If we get back below this kind of previous wick, I'm just going to kind of trail a little bit more and more as we go up because I don't see a big need to let this wick back down and kind of take me out. So if we're going to go hard and strong, I want to go hard and strong. And if not, I don't want to give any back. That's 100 points, 80, 80s to 80s, close to 100 points. But because I took the full loss on that other one, my P&L is not going to be extravagant. It might be 5,000 or 6,000, maybe a little bit more. I'll show my trade sinker card here in a second. I should have taken this on my Project X too, but I didn't. That's okay. She's still going. That's a 100-point move right there. Beautiful. And going. More than 100 points and going. On my 50K accounts, I don't need as much, and plus the consistency rules, so I'm going to go ahead and start trailing this one a little bit tighter. I'm going to pop this up to 530s and trail this up to 980s, 990s. That's one set of accounts. The other set of accounts. That's a 130-point trade. I'm going to go ahead and hit exit, and no need to give all that back. That's $400 on the day for my 50K accounts, which is really good actually for that size of a move. And that's only trading 2 micros. This one I'm going to maximize. I can afford to make more, but I don't have to. Because I took a loss on this account too, so on these sets of accounts. So if this was a one trade standalone, I'd be up 800 maybe more dollars. But since I had to make up the loss, I'm only up 600-ish dollars, right? So I would be up 800-900 and hit profit target on the day. But since I took the loss as well, which was a fair and square loss, I could have extended it more and I could have protected, but fair and square. I do want to see how much we can get, so I want to go with it. As long as she wants to let me. That's a 150-point trade and moving. $160-point trade and moving. 160 points. Wow. Woohoo. Put the W's in the chat. Do all the things. Sorry, I couldn't help it. All right, we're out. Not bad. Not bad at all. Let me update my P&L card. Yeah, I figured it was going to be 6,000 or 7,000. Hold on. 6, 7. Let me get my P&L card and I'll show you. Oh, 8. No, she's still counting. So 8, 9,000. And you can see the difference, right? So on days I don't take a loss, of course, that's easier to kind of have the 17 whatever thousand or 20 some odd thousand. But since I closed that trade at a loss on the biggest accounts, this is what that looks like, right? That's 34 accounts mirrored. It's $9,000 on the day, kind of averaging that 700-ish. Would have been higher, of course, if I didn't take that closed up loss. So, but still not bad. That's 2 trades and done. Could I do a little bit better, do a little bit more? Yeah. Could I have more accounts? Yeah. I have another 6 or 7 that I passed that I'm not going to activate until the rebuild date or closer to the rebuild date because I have enough PAs. Like I'm not maxed out on them, but I have enough now that I don't need to put all my risk on at all times. So I have a few more that I'll wait on, and that's that. So that's it. Done. But now that we have that here, I do think we capture the vast majority of that move. pretty close. Got knocked out there 150-ish points. So on the day, that's 100 points. Even if you took the whole loss, which I should not have, I should have done better on my management. But now we've made that 150-point move. If I go to the bigger time frame, it's going to be really hard to kind of sell into this, but to choose to keep buying, I think is just as foolish. So right now we're coming up on this extension. We did kind of have a full technical reaction here at the 38%. I was willing to take this down all the way to the 700s. And as long as we're staying above the 700s, I'm still a buyer. Otherwise, we just hit some full completions and a 1 hour high, 4 hour high sitting there at the 25,122s. And we're going to see. Maybe looking for a bounce now. Not that I want to take that trending counter trend kind of bounce to the downside. That's a risky play. But to pop down, figure 950s. If you need it, if you need a couple more bucks or points on the day, I would take this as a bounce with a 40-point stop and 60-point target-ish. Ish, but ta-da, that's it. Made the monies. That's all we need to do. Anybody got questions, comments? I know that's lackluster. I know that's not what the YouTube is having doing, but the more I think about it as a trader, like our job is to find our trade and be done. Our job is to not get sucked into the mass media of it all, the mass constant, needing to stream and needing to watch and needing to participate. Our job is to find a good trade or two and be done. And this has turned into a whole other level of trading for me. Even for me, I thought about yesterday, maybe something I would consider, which listen, I'm just talking out loud right now, but something I considered is what if I just take my live account and I mirror my live account, right? And I treat everything like it's my live account. Okay. So I would have my risk on based off of the 1500. So for every 1500 in drawdown, I'm allowed to trade X amount of contracts. On my live account, I wouldn't do certain things, right? I know that because I've never done that on my live account. I wonder if that would be an advantageous thing to consider to do or a negative thing to consider to do. So I haven't decided yet. It's just one of those things that I have at least considered because I don't want to get sucked in. Can you please show my settings on what?
The
Which,
indicator.
okay.
I just want to take quick screenshot real quick. Take a shower.
Okay.
Shower. Thank you.
You're welcome. This is only so high because of classes. Otherwise, I would have it turned down a lot. This is how long of a range you want it to be. So like if you want to be in and out done quicker, then of course lighten this up a little bit. Risk is this was conversational for something for people, and it definitely shouldn't be that high. But right now the multi-time frame is not functioning, so that's a bug that we just released an update. We're gonna have to re-release an update because that part is not doing what it's supposed to do. So you'll see I have it on chart. Typically I have it set to 5 minute. I like it better. Mind you, this second field does matter when it comes to automation, but for this purposes it doesn't really matter at all. So I've got 930. Of course you can pick some other ranges. Really, you can pick London, you can pick opening 6 p.m. Eastern. You have so many options, 8 p.m., 9 p.m., 7 p.m., just because gold is great for Asian session. A lot of people are having a lot of success with YM in the Asian session too, and in the pre-market. So I guess it's pretty smooth, but I haven't done YM in a hot minute. Obviously, yours is going to be relevant to your time zone. I'm in Florida, so I've got -5, and this does change throughout the year. I don't have my arrows on. You can choose to, you can choose not to. Pip and contract size, point and contract size. I like my middle line on there. Of course, zone buffer, I have it set at 50%. So you'll notice that these ranges are 50% of the full size of the range. You can change that, of course, if you'd like. Enable contract filter sizing, prevents trades from triggering if the calculated contract size exceeds the threshold. This really only applies to automation, but even for your manual stuff, it'll tell you, hey, this is outside of your risk parameters. So that's kind of cool. set the average to range value. So the ATR value, you can choose to use 10. 10 is going to be a little bit quicker. I've been liking 10 actually personally on my other templates. This one's my class template, but moving average, I have been, listen, so JGS has been JGS for the umpteen amount of years, right? It's the 50, the 8, and the 3. Obviously, we've kind of cleaned it up a little bit for futures, expediting it by decreasing the numbers. So those of you guys know, I've balanced out with multiple versions of 20 for a hot minute. I liked it. But I am pretty dead set on this 5 and 18. I like it. That's that cloud you see back there. It is keeping me away from buying this little pop. It's keeping me willing to resell this, retest down. So remember, all this is a slightly different visual version of the JGS, but I freaking love it. So you can use SMA, you can use EMA. I think with the cloud, it's not as extreme of a difference, but that's probably just my opinion. It is a difference though. And then of course the rest of it is purple and green, my theme colors, plot backgrounds. I always disable all this because I hate those words over here. And then visibility. So that's that. And then inside out, yeah, boy, hold on. Is really cool, actually, and messy. And I usually turn my labels off. But as you can see, here's our box. This would have given us an additional entry. So we have our bullish candle or an inside candle. As we break above, that's an entry. This right here gave us a buy, one and done in seconds. This, here's a buy, here's a buy.
Oh, so you have this on the same chart, or is that
Yeah.
a different chart?
Yeah, this is
Oh,
the same chart.
is that why you asked which settings? Okay, I didn't even. So is that indicator done?
Yeah, it is. Actually, we're getting ready to automate it. The automation is really cool, but for some reason it wasn't working on certain contracts. Like
Okay.
we started to play with it and was like, wow, this is amazing. And then we saw it was only amazing on the things it would load, and it wasn't loading against like MNQ. It would load against like certain crypto, certain forex, and certain futures, but really random. I think it has to do with the math is why it's not pulling it up. But remember, if we take out all the noise, all inside out is I'm gonna pick a different color than blue. Let's go to hot pink. The market is moving up. Okay, that's your bullish candle. The next candle is a retracement, right? And it continues. So think of a lightning bolt, if you will. If you're looking for reasons to buy, and I told you this also, and I'll tell anybody else the same thing too, this is just a good indication at key levels, right? I don't take most things blindly because I think that's stupid. But like, let's say you're unclear on the direction, you're kind of bouncing around the VWAP and you're looking for a reason to buy. This is really cool. It's got multiple options of stop losses, meaning if this is your entry, let me pick a different color. If this is your entry, you can choose to have your stop loss be here at 50% of the child candle, here at the other side of the other end of the child candle, or here at the other side of the parent candle. So you can choose that, and of course your risk to reward is going to be based off of that, whether it's going to be a 1-to-1, that's an ugly green, or 1-to-1, or like if you're using the bigger stop loss, it'll be, farther away. So this indicator has multiple things built into it, including IOUs. These little grayed out boxes will show you where you're ranging. And of course, the inside out itself, which is your parent candle, your inside candle, and then the continuation of. So kind of cool. Sells down, sells down. Not every trade will win. God, that's still going. She is going, going, going. Wish I was still in that, but I'm not. Nor did I take any sells. I would have taken a bounce sell. I got a little bounce sell, but 40 points, so it bounced down. She's going. She is going. But that's it. That's all I got. Anybody have questions, comments? Smooth, easy, less than 10K on the day. Mind you, I don't have all my accounts connected because some of them I'm just gonna hold until they rebill. Could have done a little better. The things I could have done better because I like to hold myself accountable. So when I tell you, it also helps me and hopefully it helps you. Is when I took. Wait a minute. There we go. Now I'll lock it. when I took this trade, even with my later entry, I was up over 30 points. I could have protected. That's number one. Number two, when I decided to hold it, I should have given it the amount of room, which was way down here, which I did not do. Okay, that's number two. So I got knocked out fair and square. Not the best situation. Remember, my entry was worse, so it was about 45 point stop. But of course, I made 150 some odd points here, so kind of makes up for it. Doesn't make it a 20K day, but it makes it a 10K day. And if you follow the math be tracking. It tracks. So that's all. Done. Easy peasy. Lock. Lock. And got our money on the day. I am waiting on a couple of payouts with a couple of firms. I think I'm probably gonna get denied again on Alpha because Trade Syncer just didn't close my trades on Alpha, which I think is ridiculous and just rude. So let's see how long I can hold those accounts because I've got a good buffer built into them. But I haven't got a payout with them in a hot minute because I keep violating something or like I was low and slow and it just whatever. So we'll see. Otherwise, everything else is going really well. And that's what I've got. So a couple announcements. I'm starting a Dragonfly account with a couple of grand. I'm likely going to create this little system so I can show people what's possible, right? So I'm going to link it to the indice copier as well as Dragonfly. Obviously, that means decreased risk because I'm adding risk in other instruments. The breakout indicator, we know as we release to fix some things, we broke others. So mind you, that multi-time frame thing is not functioning properly. We're still focusing on getting some things released for MetaTrader and Ninja. It just feels like everything on TradingView automation has a lot of potential. Again, there's quite a few people doing pretty well. My account for Blue Guardian is still net positive. Last week was like a non-starter. I think I closed out the week with 50 bucks. Whereas other people close out the week with like 3 grand or a little bit less than 3 grand, different settings, mind you. So remember, it's a long-term situation. You cannot expect every day, especially when it comes to automation, to be perfect. It will not be, especially when you add a 3-part system like Pick My Trades. It will not be. So that's that. What else? I think that's it. The research I'm doing in terms of what prop firms have the best payout policies is very much so looking like Alpha, which sucks again because they're who's denying me. But Alpha, in terms of dollar for what you can take out and the longevity of the account, Alpha's up there, Lucid's up there, Trade Day is up there, believe it or not. I was kind of surprised about that one. So I think that's important. And then of course we are know what I'm using Apex for. Ideally, I'd like to hold the accounts for a long time. I've now officially have an account that's more than 50 days, which is nice. Whereas the rest of them I lost in my little travels. So starting over with a lot of fresh ones, which sucks a lot when you're going slower. Like if I was going fast, it wouldn't matter as much, but since I'm going slower, that's really not fun. So, that's everything. Anybody have any questions, comments, or things that you guys want to go over that I can help you with? Because I've got my 2 on the day. I don't need any more. And honestly, I don't know what your performance looks like this morning or if you followed those 2. In theory, if you followed those 2, you are net green. By how much I can't say. Maybe you performed better on the first one that I performed worse. Maybe you exited earlier on the second one than I held longer. So I don't know all those, intrinsic little things, but either way, the hardest part about trading is not coming to click a button again. It's when you're buying and the market's going against you. It is so easy to just buy again and then say, well, now I'm going to get a better price and I'm just going to dollar cost average in and it's going to be better. It's so easy to click a button and stay in. It's so easy to add to your losing positions, get scared on your winning ones, keep trading even though you're already done. Like there's no sense in it. So I would remind myself and you guys 0.5% on a 25K account is only 130 bucks. Point-ish, 0.5% on a 50K account is only 200-300. 0.5% on a 150K account is only 800. And to give you an idea that today, because of where those trades fell, would fall short. Now this is that big account that's got 190,000. So of course that one made more. I'm using more size. But because I took this one and this one, I don't need anything else. This is slightly shy of that. But this is also where we go in and make the worst mistakes. We go in and I'm like, well, let me just make a little more, right? We don't need a little more. This is going to average out. If one day, because Apex, of course, counted those 2 days as 2, that holiday as one day instead of 2. If one day I made the 1,000, if one day I made 700. Another day I made the 825, which is oopsie. Plus the 825, right? Plus another day, but maybe I have another smaller day, 600. That's 3,900 off of how many days? Oh, it's not gonna let me on this device. That's dumb. 5 days, I'm pretty sure. That's only counting 5 days. So that still gives us, wait, let me make sure. 1, 2, 3, 4, 5. So remember, that gives us 3,000, right? Almost 4. Now I still have 3 more days. So let's say I have another day that's 800, another day that's only the 700, and then another outlier day that's the 1,000. That's 6,500 since I have to keep a balance of 5,100 in that account. That still means I can withdraw nearly 1,500. So you don't have to be perfect. Some days are going to be bigger than others. It's fine. It averages out. None of those days are statistically or 30% or more of your profits. That's what real trading looks like. It looks something like that, which is it balances out over time. So low and slow is the way to go. I think it's much, much better. And that's everything. That is everything.
And I reiterate too that Lucid account, and there might be others, but Lucid's the only one that I know off the top of my head. Doesn't have that monthly fee. So if you are taking the slow approach that Jenny's been preaching recently, well, over the last several months, then definitely that would be an advantageous option. You buy your eval, you can take your time. You can buy up to the 5 evals using Jenny's code 6FTC, and just completely grow it slowly, even if you miss out on some moves or whatever the case may be. As long as you're maintaining the account, that's its main purpose, and you hope that over time you'll catch the majority of the moves or gradually build equity on your account and compound that.
Yeah. Which account are you buying from Lucid? Do you know?
I love the flex accounts. The black looks advantageous, but I think the flex gives you more. I guess just has better metrics, I think, and a little bit more bang for your buck. So the flex account specifically the 50K.
Hmm. I like them all for different reasons, and that's kind of problematic. Hold on, let me pull it up.
They have a lot of good options.
They
Yeah, it
all of
just
their
depends
options.
where you're on.
Hold on, let me go to close this chat. Start trading. So I'm going to pull this up here. So the thing about Lucid, so if we go, they have a great job. They do a great job on their website too. Let me minimize this. I don't need that open. I'm going to try to extend this a little bit. Just to get a little bit more of a view there. And the coupon code is going to make it a little bit lower than that. Don't ask me, but the pro is what, passing a day, right? So passing a day, which is kind of cool. But then on their funded, you have 5 days of only $50. So I like that, especially on these smaller accounts. Okay, that $50 is a huge difference than the 150. Now, granted, obviously, it's harder to hit your targets if your consistency is 40% and you had a minimum day of 50. So I was really falling in love with the pros, you guys, but that alone, that's kind of a deal breaker because this rule hurts this rule and this rule hurts this rule. If it was no consistency and the minimum days of 50, that would play out different. But since there's consistency and the minimum of only 50, it's very limiting in my opinion. So I think that's kind of hard personally, but that's Lucid
That's
Pro.
isn't that sort
But
of similar to the Apex? Once you go live, you have to have a certain amount of consistency. Well, once you go to a PA, because I know I believe on the Pro, I think the other thing too that takes into account is that the rules and that consistency may be a little bit more of a burden. But I believe as you grow the account, you can also transfer more capital if you are called up to live.
true. Well, I think the biggest reason why the Apex 30% consistency isn't as big of a deal is because they have 8 days. So here with 3 to 5 days, it hits different. Because remember, it's figure how it washed out, like with the example I just gave on the calculator. Like it washes differently over 8 days. So like let's say I do have a day, like yesterday, for example, I closed out at 2,500 between the 2 days. Two happen to be big days. This is one day. So as long as I get my account still up to that 8,000, I'm still not breaking their consistency rule because there's 8 days to accomplish it. Whereas here at 5 days to accomplish it, and I know we always think we want the quicker withdrawals, and we do to an extent, but it hits different. All these rules really do change the way it works. But honestly, guys, all of these, I don't do direct. I'm trying not to do the whole, let me buy back my funded account. Let me buy back. It's really tempting, really tempting to spend 500 bucks on that, but I don't. So I try not to do this. I think since this is a numbers game, that goes against the numbers because it's not just proving you got a payout, it's how much did you spend that month to get those payouts. So, I mean, that's your real ROI. Your time invested and then the dollars invested equals X amount. So buying these, I don't think are great, but the rest of these options all have pros and cons. So every one of these, I don't hate any of them. This is their black, which is 2 days to pass. I like this one a little better than the flex because then you don't have to be perfect on that. But then the funded, it's only 3 days to pay out with a 40% consistency. So that's kind of cool and get paid up to double on your second payout. So kind of cool there. I like that 60%. And then this right here, the 3 days, that's nice. And then of course the flex, little cheaper account, it's exactly 50%. So this can get problematic to where you're now breaking rules. And if you can't tell, a lot of the prop firms are coming out with strategic rules that say you're not allowed to do the spoofing or whatever. Please don't hold it against me if I get the word wrong. But you know how you can like hit buy, hit reverse, hit sell, hit reverse, and that will kind of bring down your balance a little bit when you've made too much. You technically can't do that anymore in a lot of these accounts. So
I
this
believe
makes it a
too,
little bit.
I don't know if they said the exact dollar amount, but from what I've seen for people who have passed the evals within that time period, is that you can Lucid gives you a little bit of an additional buffer, so it
Yeah.
doesn't hinder you. So like, let's just say it's probably like somewhere with the 50 $100 range, or $200, whatever the case. If you go over a little bit, that it won't make you have to make additional days in order to stay under that consistency.
Lucid is better than that than any other firm that I've seen. Other firms, they really want it to be pretty close. This one, I think you have a percent even or two, and they'll still pass you. So that's nice by far. But their flex accounts, guys, cheaper price point, and then of course it's 5 days of only $100, which is better than the 150 on other ones. So and no consistency rule, meaning I can have my big day where hey, even my 25K accounts hit 400, 500 or 700 that day, and it doesn't hinder anything. So Flex has a huge advantage there. Lucid Black still has your consistency rule. None of them have a daily loss limit, which is nice. And then of course their pro has your consistency rule too. So different stripes. Every one of these accounts I think are really good. And from what I'm seeing, their processes, like there's a lot of potential in terms of which accounts pay the most. Apex is great because you can have 20 of them. But that 20, if you're blowing them and treating them like prop firms, it gets expensive, number one. Number two, it takes longer to a payout. Number three, you're more likely to get a denial with Apex than any other firm. But like I've been saying very openly, Apex has been my favorite. Like I am almost I got really upset a few months ago and I was like, that's it. I'm just gonna say that Apex is gonna make me a better trader. And I don't know if you guys remember that, but I think I manifested that and a whole bunch of Jesus because ever since then, like everything in terms of Apex has changed. The way they handle problems is different. They made a mistake on one of the violations. I emailed them and said, hey, look, this did not happen. And they recredited it back. The day that I blew those accounts when I was in Spain, I had submitted for a payout that had a buffer. They didn't have to approve those withdrawals. I clearly had plenty of money in there other than the crazy behavior, but they approved all three withdrawals that I had pending, even though those accounts were blown. And I'm not saying that they're always going to do that. And I'm sure there's times that they don't, but in that case, I had so much money. And maybe it was just a God thing where they had technically taken it right before the blow, but there's a lot of things that they are getting right. Like once you get their system dollar for dollar, it's paying me exponentially more. Now, granted, it took me all year last year, well, most of last year to practice into that. And it was not easy. Like I wanted to pull my hair out at sometimes. But Apex, I still think, has been my favorite as of right now. Lucid, Alpha, Trade Day. Um, I wish it was Take Profit Trader, but it's not because I lose them too quickly. So I'm only running two accounts with them. I'm not going to go anymore. It's not worth it. In fact, maybe I would, if I get another time where they delete the accounts, I'm probably going to go down to one account with them and simply that's it. This way I can't accidentally break the hedge fund rule, the hedging rule. So we'll see. And maybe that is the solution. It's just a bigger account and one account with each of them. So I don't know. We'll figure it out over time.
What about because you're using your copier, right? With your take profits, you're not doing it directly through their Tradeovate.
That's correct. Yeah.
Would you consider maybe separating that account and just doing executions via Tradeovate with up to 5 accounts?
Well, I'd have to think about what the value of my time is. And
Hmm.
my mother taught me that really young. I was always in business for myself, and I always tried to be, and I still struggle with that, but that whole be everything. I did the cooking, the driving, the cleaning, and because I wanted to be that super person, right? So I know it's a long-winded answer, but the value of my time is very high. And I'm not being cocky or whatever, but the value of my time, let's just say, is $9,000 this hour. Okay. And I know that's kind of being pretty cocky here, but that was the value of our hour this morning. And granted, I'm gonna hopefully achieve in terms of actual payouts. I want to do the math on what I actually get payout wise versus what I've built. I'm guessing it's from around 20 to 30%, best case scenario. So either way, that's a couple $1,000, the value of my time in an hour. Okay. So if you're looking at it from a business perspective, is it worth it for me to put in the time, the energy, the stress, and the connections to separate this? I don't necessarily think it is. So at least for right now, if my goal is copy trading and they don't want to play ball, I'm probably not going to continue to pursue them in the same way. Now, granted, I have failed a lot at copy trading, so I don't know if it's going to stay my goal for the next 6 months. I'm trying to hang on to it, but the mistakes are high. Because if I pull up remind you, hold
If you
on.
had to do that, you'd probably be better off in your particular situation just
Yeah, I may as well trade
using
my
your live account, and if you wanted to do separate trades or whatever.
I may as well trade my own money. Like let this load for a second. It's TradeZella, and no, not all the accounts are linked properly. I'm sure I have to come in back in and link some, but um, give it a second. The truth is, again, I make human mistakes. That's on me. But then if the copiers and stuff make mistakes and it blows things, that's on them. So add both. So this is a me mistake. That's that first trade. The second trade hasn't come through yet. Figure if I can't make this work copy trading wise and I have to gain this much percentage, I'm probably better off with my own 20K account, like dollar for dollar. And I've been doing the math of how many thousands I would need in there to be able to duplicate. So yeah, that's what I'm thinking at least. And I
Yeah.
don't know for sure. I'd have to do the math more.
Jenny, hi. I'm so glad that you went over these different uh, companies because I've been waiting because I don't have money to throw away. I tried one time to pass the one test, and I think it was with Top Step or and I'm telling you, I don't want to, lose any more money. So with you speaking about this today, it really helped me, focus on which one I want to go with. Thank you.
No, you're welcome. Hold on, I'm moving this real quick.
Yeah, while she's moving it, like if you do purchase any of those companies or whatever the case may be, it's it's really a difficult thing. I struggle with it myself often. With the evals, we get caught up in the moment of trying to pass them in a certain set time, trying to beat the actual time for the rebuild date and things of that nature. And it piles up over time. Everybody has different financial situations, what other bills ever have to be paid and whatever in the house, this will obviously come secondary, and you're hoping that this can add, to that income. But the main thing is that getting the right eval that fits you and fits your personality and as well as your finances where you're at the time, and then two, um, not trying to reach the targets or metrics as or viewing the targets and metrics as whether you had a positive day or not. It's really just making sure that you allocated the right amount of capital to each position that you took and that you managed the position that you took correctly. So be more worried about the process itself. Even if you only made a couple bucks from it, it's all the same thing, whether you're using $100 or you have $100,000. If you're doing the same process, you're making the same percentage based off of the skill and the way that you actually are trading. So again, if you're doing everything correctly, even if you've taken the loss, but you've managed correctly, you didn't do multiple trades in that one, particular session or that one entry, then you've done good. And then you stay to your rules, whether that's one trade, two trades a day, or maybe you don't have a limit on trades, but you have a limit on losses. And I'm only going to take one or two losses a day, and then I call it a day. That's it. Come back the next day. It's better that you keep the account than blow the account. You know what I'm saying? Even if it was a losing day, that's an achievement of keeping your account. Um, the other thing too that a lot of people always talk about is that let's say you give somebody $100,000 and you tell them you want them to grow that, as in opposed to you give somebody $1,000 and they grew that to 100,000 over the course of like several months, 6 months, or whatever the case may be. The person who's grown it to that 100,000 is going to have be more longer likelihood and more longevity of keeping the account, as opposed to a person who just got the 100,000. The person who would have bought an eval, the highest dollar amount, trying to make money in a quick amount of fashion. Sometimes you might get lucky, but if you haven't built that skill, that process, that technique, and that mental muscle, in lack of a better term, as far as for trading, then that's what gives you the longevity. And I think that's the main thing that Jenny's been sort of trying to let
Okay.
us get a
Yeah.
bigger picture, bigger idea of doing.
So honestly, I was listening to your comment there, Miss Charlotte, and honestly, there's just so much to say about it. FSP did a video, and I don't reference a lot of the gurus online. You guys know that, and it's not for love or hate. It's just I think there's so much noise out there. It messes most of us up for one reason or another. So I'm gonna try to pull this up if it will let me here in a second for my Microsoft account, which I think is now also signed out, which is interesting. But he did a video, and I think that was a huge turnaround point for me. So, and I know some things are caught and some things are taught, but the reason why this was a turnaround point for me was most of those people aren't doing any better. They're just doing more. They're failing more. And it's hard for me as a trader, and that's where I'm struggling with, is to kind of get my mind grasped around this whole concept of this is cycling the accounts. It is part of the process with prop from this particular space. But and again, we have to take with a grain of salt. They're spending ten to $70,000 a month on evals, not including how much those people are making. A lot of those affiliates are making a lot of free accounts. So they're getting a crap ton of accounts, and spending 10 to 70,000. No, I'm gonna say that one more time. 10 to $70,000 a month on evaluations. Okay. So before you go and compare results, and by the way, I'm not throwing anybody under the bus, but my results so far this year, I think, are still better, especially if I'm factoring how much I spent, which is less than that, and didn't get free accounts. But it's if we start looking at this like a cycling process. You said you bought one account. One is not going to do it. Like, I'm going to pull up a different screen for a second. I'll bring you back over. Whoopsie. Bring you back over here. So we know what did we say for Lucid? They're on average, let's say the flex accounts are 70-ish bucks a month, okay, with coupon at checkout. Figure you spend 140 bucks a month, okay? So that means you're allowed to buy one every 2 weeks at the very most, and no more, okay? And you don't need a bigger account. You're practicing on the skill set. Because that account has less than $1,500 in drawdown, you are only trading one micro. That's it. One micro is all you're allowed to trade. Now, on the day, if you have a 45-point stop loss, which is, I'm not going to fib, some days you probably need a little more room than that. But most of the time, that's pretty ample if you're trading on the 1, 2, 3, 4, 5 minute chart, 15-minute chart. That's simply not enough. But even if you took two losses, that's only going to be 180 bucks down on the day. So you can lose 5 days in a row and still not lose the account. Okay. Which, if we started looking at math like this and stopped with this overzealous, got to achieve, we have to start here, get the skill set, get the discipline in order to get to here. Okay. Which this is obviously the goal. We want to be able to have 5, 10 accounts making $200 or $300 a day, making $200,000, $300,000 a year. But that's a lot of money, especially when you think the value of your time, which is something we talked about a lot in our FX trading. Notice how my spreadsheet back then had what we made, the value of an hour, okay, an hour of your time. This right here, assuming you spent an hour trading, 5 days a week, makes the value of your time very, very high. Where else in the world can you go make $500, $600 an hour from home, part-time, anywhere you want in the world, as long as the internet doesn't super suck? and no boss, no nothing to kind of tell you what to do. This is the goal, but we can't start here because where YouTube makes it look sexy, the whole trading larger size, taking more trades. The reality is, I think we have to get good at the one or two accounts here. Okay, and there's another person on this call if they're still on, who would I think benefit. I honestly think that this account is better. So I think people need to start at the smaller account, which forces them to use a smaller size. Okay, so you're kind of forced. If you buy the 25K accounts were available, you're not allowed to go in there with more size. So it does lock you up a little bit. So smaller size, smaller cost, okay, and smaller amount that you need to hit before you're allowed to get a payout. So instead of having to come make 3, 4, 500% to get $1,000, now you only have to make 2, 300%, which is incredibly impressive. But it's over time that we're trying to accomplish this. And when you see these P&L results, they're like, hey, I made this much. That's great. But if you can't keep it, and even if let's say I made $40,000 in payouts this month, if I have to spend an extra 20,000 on new firms because I was stupid with them, I'm actually only dollar for dollar keeping 20,000, right? So remember, it's about what you're spending too. And you got to look at this like a cycling program. If this was your live account, you'd be treating it differently. You would say, hey, I've got 2,000. I'm going to go for, a couple percent a day and grow that slow. But since we're doing it in this method, we need to say, hey, look, my budget is 2 Lucid accounts a month. So can you afford this? It's $140, and then hold yourself to it. And you're probably going to fail. Like, I wish I was fibbing to you, but you're probably going to fail. If you reset it, cool, you can reset it. It's a cheaper price to reset it, by the way. And our goal from there is only to come in, and I'm allowed to take 2 to 3 trades a day. Hopefully some of my winners are going to be bigger. You guys will notice I added this right here, which is the average R to R. I right now have it set to 1.3, although you can see on my TradeZella reports, I'm achieving more than that, but I want to be really down to earth. I want to undervalue this rather than overvalue it. So figure some accounts, if I'm buying, let's just say some of them got knocked out here. Some of them I didn't be able to catch the bigger move. Some of them had a trail here. So on average, I'm only getting a 1.3 on a 2R move, which I think is, down to earth, right? I'm low balling. I probably could speed that up a little bit, but I digress. You're taking 2 to 3 trades a day, hopefully averaging a little bit better than a 1-to-1. If the average win, assuming you have a 1.3, is about $400, this is on that bigger one. So let's go to your smaller one for a second. $1,500 in available drawdown, 45-point stop loss. This is based off of 1 micro. I'm going to type this into 1. That means my average win is going to be about $122 because it's a little bit bigger, right? It's a little bit bigger than the losses are. If I lost twice, I'm done on the day, which is about 180. That gives you plenty of days. You're going to be surprised. You're going to notice, well, some of those trades you were able to catch the better part of the move a little bit better, whereas sometimes you don't. Sometimes it'll just work out perfectly where you caught it, and sometimes it first pulled back too much, knocked you out, and maybe you didn't get back in. So we're going with an average over time. We're taking 2 to 3 trades a day and no more. And you're probably going to suck a little. It's going to fail a little. But my rule for you and for anybody else would be you're allowed 2 accounts at a time at the very most. And you're only allowed to rebuy them, once, twice a month until you're at the point where you can say, hey, wait, I've gotten at least a payout. I've gotten somewhere. So it's not hard though. My results this month are probably not going to be as good because why? This day right here, I lost all of my funded accounts with the exception of the hugest one, which sucks, but it's life. So it kind of goes with the territory. Now I get to rebuild and regrow up, and I've got them. So you guys can see I've got the P accounts, but figure because of the way the days are going to fall, and I'm planning on getting denied my first Apex payout. I'm just digesting it now just in case I have to get my feelings hurt. I'm probably not going to get the 20, 30 grand from Apex that kind of filled this in. So all I have is like the 15 grand from Apex I got on this portion, right? So it's going to be smaller, but month over month over month, if things work out the way I want, that would mean 1 month is going to be 36K. 1 month will be 20K in payouts. 1 month will be, let's say this one now bumps back up to 50K. Let's say life, I don't want to speak this into existence, but let's say life happens. I only got 5K that month after expenses, right? Another month I got 15K because again, I got to rebuild. over the span of a year, this equals, you know, $200,000-300,000. But you have to build this, and every fall down like this one means you plan on kind of that step back down, because just like in real trading, weight loss, everything else, every time you do this, what happens after this? 100% of the time, this, okay? 100% of the time. So plan on that, and then it doesn't feel so bad. Which brings me to my last point, which is the feelings. I'm at the point where I want to accept the feelings. I want to say, I'm not going to beat myself up over the trade. Like you guys saw the trade this morning. I should have done a little better on how I managed that particular that first entry. I should have. And the old me, the few months ago me, would be sitting here like, well, if I would have done this, if I would have done that, blah blah blah. And the old me would be very, very aggressive in trying to get to my personal daily target, trying to get back to what I should have, could have made if I had done both of these trades well. I would have been mentally and emotionally hyper vigilant, trying to force the situation. And some days the market will give it to me, but the days that it doesn't, the market's going to take everything. So I'm deciding peace, and I'm not perfect at it, but I'm working on it to say, hey, this is how I performed today. I will do better or work on doing better. I'm going to accept, I'm okay with that kind of vibes. And then keep going. So it's a process though, and it's an expense. So plan on that. Not that I just yapped and yapped. Yapped and yapped and yapped. But hopefully that helps. Hopefully.
It does help. It does help quite a
It
bit.
did. Oh, it did. It did. It really did. Yes, yes, ma'am. I don't have the big account of money to kind of throw away, so that's why I've been kind of just waiting, watching, and listening and taking in, And so now I think I'm about ready to maybe try to do an account again.
Okay.
Thank
Can I
you.
tell you the strategy that Robert and I did a one-on-one. We were doing them kind of regularly, working through just a lot of stuff, and haven't done as many recently. But the strategy that I'm going to go to a different instrument for you. Let's go. I hate that view. Hold on. I don't want that. I just want the change percentage. There we go. So I'm going to go here. The strategy I have that's special to him, right? It's something for, that he can call his version of JGS. All I'm having him do is 5-minute time frame. Okay, it's literally JGS. You can use an oscillator. There you go. Oscillator meaning either the chop zone or the MACD or both. Okay, up to you. At the end of the day, it's going to be what your eyes see best. But you're allowed to take 2 to 3 trades a day. Okay, that's number one. You're using the 5-minute, but no lower. That's number two. Number three, as long as your oscillators, you can again use MACD and chop zone. I've got another thing that hopefully will be released to you guys shortly, but it's very comparable to the chop zone. Once you get your candle close above, so think the crossing of the 5 and the 18. Okay, this one happens to be set to SMA. You can change it to EMA, whatever your eyes see best. I like the 5 and 18, and that's what I've got him using. Is once you get either A, the crossover, or B, the candle close on the opposite side. So like bullish candle closing on the opposite side of the 18, or bearish candle closing on the opposite side of the 5, right? Or the crossover. You can choose either one, whichever one makes more sense to your brain. All that you're going to need is, cool, you've got this candle here. You need to see the next candle or continuation. Sometimes it's not going to be the very next, but you see how this candle is moving above. We've got continuation to validate our perspective there. So what that means is from this candle, I'd be buying, kind of targeting highs or whatever percentage move that I would be looking at. In this case, I'd be targeting here, preferably with at least a 1.5 to 1. You can probably target more than that, but for beginning, I would be just doing 1.5. Like I'd worry about optimizing for more after you get good at execution. So you get your crossover, you have either the candle on the opposite side of the higher or lower moving average or the crossover on the cloud. You have a confirmation of your oscillator, meaning the fast MACD is also in agreement and or the chop zone is also in agreement. Now your job is to stay in that trade unless you get below the low or kind of your entry candle. In this case, the entry candle kind of is a little bit tight, so I probably wouldn't be using that. I would be using the low. In this case, that's 25 points. Very, very doable. Now my job is to try my best to stay in this trade until A, I hit 1.5 to 1, and then I can trail by candle or whatever, or B, until I get a crossover on the MACD, or I'm getting into bearish territory on the MACD or the top zone. So in this case, we might have got our 1.5 to 1 here and started trailing, or we could hold all the way until here, which is our first cross back down below of the moving average. And of course, we've got some agreement there. We end up going for more, but easy. That's one trade. Not all trades are going to win. Trailing by candle, I think is going to be good at first. Closing at a happy 1.5 to 1 is probably good at first. Because look at this one. That's going to be a great sell down. I like looking at the close of the candle rather than the cross, but it's going to be how your eyes see best. It's not up to me, it's up to you. So I'll use the sell example. This candle closes, this bearish candle closes on the other side of the faster moving average, which is the 5. Okay. The next candle continues. So now I want to use structure. This case, that's 54 points. I can use the actual kind of entry candle if I want, depending on the setup. That's going to be that one's going to vary. But here we go. That next candle does what? It continues. It gives us confirmation. So we're continuing past the close of that previous candle. So now we know we can be in. This one has your MACD confluence, but no chop zone. So I know I'm going to need to treat this differently if I want to kind of hold this because it's against the bigger trend. Although we do look like we're trying to turn around. Now I'm going to stay in this. Since I know my oscillators are not in agreement, I'm going to trail this tighter because MACD agrees, moving average agrees. There's an imbalance here, but we're not all in agreement. So for this one, I can stay in it until we get the first close on the opposite side of that faster moving average, which happens here, to give you an idea. So in this one, you would either only get a 1.7, 1.27 to 1, because this is where that candle closes. But by then, now you've got some bearish confluence. So you can decide if you want to stay in it, because now the bears are in agreement, or if you want to wait for a re-entry, in which case that would be here. You're kind of moving up, you get no continuation on that buy, so you get another sell. Very simple. This is just another version, kind of customized for one of our favorite clients of JGS.
What is the one at the bottom? What is that called? I know the MACD, but the one that's with the straight lines, what is that called? At the
That's
bottom?
This right here is called the chop zone. So it's a
Chop.
free oscillator on TradingView.
Chop zone.
And of course I customize the colors because I'm a weirdo. I like things to match. So I kind of want to only see color 0 and 4 and then have the rest of them a little bit more grayed out, as you can see. I like that a lot. Otherwise, there's literally no settings. I can make it line up with the higher time frame chart, which I've looked at, but I don't like it. I think it's way too late. So
Okay. Thank you.
you are welcome. But this is just an example. And then you're only going for 2 or 3. You're going to find that it's probably easier than we think, especially when you can say, hey, look, I'm going to stay in this trade until I'm given a reason not to. Chop zones are still going to be hard. There's no way around the consolidation points where this was overnight, I think. That was Asian session, so price wasn't really going anywhere or continuing down. But you can survive this and you can know, hey, I'm going to keep holding that sell until I'm given a reason not to. And you're really not given a reason to exit a sell until MACD starts to come up around here. We start to get closes above the moving average around here. And then, I think people are holding too long, trying to catch too much, including myself. You guys saw me do it this morning with that first entry over here. Man, that is moving and grooving. Same thing. Pretty simple. You can trade it for a little scalp. You can use the entry candle as your stop loss. In some cases, it might be a bit tight, but honestly, it's not a bad way to be. And try it. Try it for 100 trades. Most people overcomplicate trading. They overtrade, they overcomplicate, they go for too much, and then they're like, nothing works. Let me try another strategy. Let me try another tool. Honestly, a little bit less trading, be a little bit happier with a little bit less points, take a little bit, take your strategy and actually stick with it over 100, trades. Because remember, everyone wants to over optimize. Every strategy looks like this. Hopefully a better one is going to have a higher equity curve than a weaker one. I got to pick a different color because we can't see that. But a better one is going to have a better equity curve. Maybe a weaker one is going to look a little bit more like little, little bit of an smaller kind of gains over time, but still up. Either way, these periods are part of every trading strategy. So if every time you get to here, which is let's say 10 losing trades, you go jump strategies and you go try to change what you're doing, you miss out on here. It's the same thing like I'm going to buy Bitcoin. It fell. I want out. So you bought and you sold. Now you're negative. Well, crap is going up again. So you buy, you believe in it again. And what happens? It sells. And now you're negative again. And everybody else is over here going, I'm making money. I'm so happy. And you're like, Bitcoin's a scam. Like, this is never going to work. Like, because what happens? It goes up. You start to say, okay, I'm going to buy. You're very happy because you bought a little bit sooner this time. It goes up. But no matter what, it's going to come back down. You just can't sell here. You got to hold until the next tier. So, same thing with your strategy. It's the same concept in play. Every automation manual trading is going to have an equity curve that has moments like this. And if I pull up like it's part of it. And then if I could teach anything, I would teach people this, like this. So
I'll also adding on to that another question for you. What would you be your advice that you'd give to anybody that would listen to this on the process of being able to take your trades on a regular basis with confidence, getting the optimum entry, managing the trade and allowing the process to happen, and then also not blowing up and then being able to get to that 100? That would be like a combination, when I guess in your best words, on how to maintain and be able to come at this and do the process the correct way, so you can actually build the skill and grow these accounts correctly and maintain these accounts, and what type of mentality is that going to take to achieve that?
that's a great question. I think that's a amazing question. First and foremost is know your numbers. And I know I'm a numbers girl and it doesn't make me like super smart or whatever, but if you know you have a 65% win rate, the problem is people know they're coming to the table with this and then they're shocked when they get a loser. And then they act stupid, including myself, when we get a loser. You got to know 35% of the time, provided this is your number, this trade is going to lose. So what does that mean? It means when you're losing, like let's say we tried to whatever, we tried to sell here, or here. We end up adding to our sell, and then the account is blown, right? It's gone because we added, couldn't hold. And then of course now we believe the buy. So we retrace, we try to buy, and then we blow the account. It's this crappy behavior. Why? Because we're shocked and shaken when we get a loss. So number one is we've got to accept the losses. And that means we have got to get our fingers off of the mouse or whatever buttons you're using from the whole, hey, I'm going to just add into this position, add into this position. So that's number one, is we can't be adding into positions. Number two, we have to accept that X amount of trades we take are going to lose, and it's part of the plan. So we're not shocked that if 35% of the trades are going to lose, it means you could easily have 10, 12 losers in a row. And that's part of a statistical plan of 100. Like, is it practical that it's going to happen very, very often? No. But over the course of 100 trades, you can definitely have 12 losers in a row and still manage that 65% accuracy. So know your numbers and accept them. If your trade plan says 45 points, of course, we're going to alter a little bit, but a little bit needs to be measurable, meaning if my plan is 45 points, I'm allowed to deviate by that by, let's say, 5, 10%. Okay, but no more. It doesn't mean I can have a 45-point plan on my stop loss, but this trade I'm going to move to 200, and this trade I'm going to move to 5, and this trade I'm going to, that's all over the place. That's not the same plan. So I think the next thing would be stick to the plan. How are you going to know what plan works if you're always altering it and deviating it at all times? Like, I know for a lot of people in this room, they're using some version of orb, so that kind of stop loss is a little bit preset. But to kind of relate it to some form of orb, it would be you can't sometimes choose to use the 50% and sometimes choose to use the other end of the range. You can't sometimes choose to let the winner run and then sometimes choose not to. Like, you've got to like optimize the winning days as much as you optimize on the losing days. So you've got to follow some level of a plan, because if not, to be honest, the day that this happens, you're probably going to miss it. And the day that this chop happens, you're going to get stuck in it. And that's just the law of, I don't know, what is that axiom? The axiom of trading, the axiom of life, I feel like it's just part of it. So Number one is know your numbers and accept your losses. Number two, follow your plan and whatever that looks like. I think most plans potentially have an edge, but most people don't follow them to ever find that edge. Like they think they're following, we tell ourselves. And if you go back through your Tradzella, you're going to find, even I find, I didn't follow my stop loss on this one, right? I said I wanted my stop loss here and I was going to let it run. I didn't. I was supposed to protect within 30 points and I didn't. So I broke my own plan this morning, public in front of you guys. So human error is going to be part of it, but we need to own it, label it, name it, and work on it every chance that we get. Because if not, this human error, we're going to convince ourselves we're following a plan. And the reality is on Tuesday, we did something slightly different. On Wednesday, we did something slightly different. On Thursday, we were in a mood. Friday was a crappy trading day. And then at the end of the week, you're like, this whole system sucks and this strategy sucks. So it's not true. Your behavior sucks. Your execution and your ability to follow a plan is what's sucking, not the strategy. So there's a crap ton of people making money with orb. I don't necessarily think it's the best way to trade New York Open. I think it's a great directional bias aspect, but I don't think as a standalone it's the best. I still think JGS in most cases would outshine this 10 to 1. And that's obviously a biased opinion, but point is any strategy can work. I'm not a fan of trend lines on the smaller time frame, but if you're following it, you need to define if you're taking the bounces and the breaks, okay? Or only the breaks and how you're doing that. Because if you're subjective all the time, the subjectivity is going to kick your butt. And then I think we said math, we said strategy, and then the last would be mentality. So, which is going to feed into both. If you don't get your headset right with the discipline, the headset that says, I own, it's like coming to the charts in the morning and saying, wait, I recognize I'm coming to the chart under a cloud because most of us are. And we try to think that we're better than that and we're smarter and more adaptive and more evolved. But the truth is you're coming to the chart with the cloud over your head. Maybe somebody posted the payout that you didn't get. Maybe you took a loss that you should not have taken. Maybe you had a stupid rule from a prop firm that was like set you on edge. Maybe the move happened that you wanted to have happen and now you're appearing. Maybe your spouse said something. Maybe you got a bill in the mail, which you should have had enough money to pay for, but you've been buying all these prop firms, so you don't have it. Maybe somebody posted their new car video and you're like, well, what the hell? Why not me? Right? No matter how you look at it, we're all coming to the market with a cloud to some extent, some worse than others based off of your mental and emotional capacity and whatever else. But we have to own that cloud and recognize that when we see this candle, we're not just seeing the candle, we're seeing the cloud around the candle. And the sooner we can kind of own that, recognize that, and get a little bit more concise with how we're thinking, seeing, and feeling, maybe we can kind of blow away some of that fog and that cloud so we can make clearer decisions. Because I think most people are operating under this predefined non-sensory that comes from all areas of life, trading, not only trading. And until we fix that, we're not going to get any better, guys. That's why some of us are taking 12 entries in a day and 15 trades and then doubling down on the losing ones and failing to hold the winning ones. That's why some of us are not holding the strategy or taking a loss. And that's why some of us are going back in and hitting rebuy, reset, rebuy, reset. So last but not least is that mental and emotional discipline to say, I'm allowed X amount of accounts on the month. I'm allowed X amount of, resets on the week. I'm allowed this. And then hell or high water, I need to follow that through. And if I don't, I need to discipline myself probably. I haven't figured that part out yet, the whole discipline thing. That's not my strength in life, guys. But discipline is probably what we need. Because a lot of us are making those decisions too that I think are messing up everything. Because those bad habits are bad. And I know it sounds like a no-brainer. This passed a lot of people's accounts today. But the behavior that made you go quadruple down and make a crap ton of money here is the same behavior that is going to blow the account that you just earned next week. So I follow the plan of I do my best to treat my evals like my funded and just trade them accordingly. Meaning some of these accounts that we saw with 730s are an eval, and that's okay. Like, could I go and make a crap ton more? Yeah, but I don't need to. Like, I'm going to treat it just like I would treat my funded account and keep it growing. The only exception is if I have a rebuild coming up. So I know that was a whole bunch of just mental dump, but I'm trying to create those mental and emotional rules because the cloud is real. The misbehavior is real. And I'm sorry to sound like a mommy over here, but we're coming, we're misbehaving, we're we're seeing through cloudy glasses. We're making the decisions we know not to make. We knew not to make them before we came and looked at the charts, but yet we come to the charts and now we're making them. Like what happened? Where did the gremlin come from? So that's all the things that are on my mind, I think.
Perfect. Thank you, Jenny.
Oh, you are welcome. You are welcome. All right, guys. Hey, she is still buying. We're coming up on the next 4 hour high, actually. And everyone's trying to sell, so the buyers are gonna get exhausted. 120s, okay? And then hold on. 180s, 290s. Hold on. 120s. I think before this gets a true sell, they're gonna cash out everyone's accounts who are trying to sell, which means I think we're gonna pop to a few of these levels, and they're gonna do it in a way that's harder to. That's just my opinion. This is that kind of conspiracy theory. We got 180s.
Yeah, we have a whole bunch of open range to that upside, and it seems to be the buyers seem to be holding. If there's a pullback, it'll be very minimal. But it looks like the structure's holding, and yeah, it might continue to go prior or even through FOMC. And that's another thing too, guys. There's FOMC minutes at I guess 12 Eastern time, 1 Central time, PM. So just keep an eye out for that. And you also have a few more comments too that popped up in the messages.
I will definitely. Well, thank you for telling me. I'm gonna go take a look here in a second. But this is what I would be looking for, guys. Let me see if I can get that path. I think they're gonna try to convince people we're selling, get everybody involved. So that means we're gonna have to take some kind of a level, maybe here or here. I don't think we're coming all the way down in here, but get the sellers involved, retest, make them really think we're involved, and then come tag one of these levels before we get the big move. I'm not saying it's going to happen exactly like this, because again, that FOMC minutes and other things can change that. But I don't know that they're going to retest 50% of this open range easily. I think there's too much volume. I don't know where I'm gonna have to pull up this. I think I have it on here. Let's find out. So this is just from the overnight. The point of control is still way down there. I find that very hard to believe. Point of control, that's got to readjust. That's got to rebalance. That's insanity to me. Sorry, hold on. I'm just reading this is probably going to rebalance to at least up here. Figure 24,900s. But I just don't think they're going to make this sell down, which is a lot of points. So 25,000 all the way down to here. Actually, not that many points, which is surprisingly. But the ATR is actually not that big. Yeah, I would expect something like this. Some kind of a we're selling. I'm going to get you involved. I'm going to retest this 50%, make sure everybody's really sure that we're selling. Take one more level or fail to take that level and then shoot up. So I would look for something that kind of looks like this. And I'd be more interested in taking the buy than I would the sell. Just as with the trend, because until we get a big sweep, and that sweep could be 200 points, maybe more. I've got all the way up to the 290s. And it doesn't mean it has to happen that way. Of course, the news can just trickle this down and then the news pops it up. So lots of narratives there. But for me, I've made my money on the day. I could have made more. Let me be fair. I did not. Because I had poor behavior, and I'm gonna call poor behavior. So I showed your settings for futures. You were using the 5 and 18 EMA. Do you make adjustments in the settings for the MACD? No, the MACD already has that fast MACD included. So since that's already fast, which remember, if you think about it, it's the 5 and the 15. It's literally the whole strategy is just a melody of moving averages. And it works well enough with some confluence, some human confluence, that it's kind of amazing. I can call and tell y'all I have years of experience. Yell at you. I have years of experience. Discipline. Okay, call and yell at me. I need some more discipline. I'm trying to get better at disciplining the people in my life too. Like my youngest kids, not like adults, obviously, but more better at that. I'm not that. I'm more like I'll love you into everything. but that is not always the best. So I'm still working on it by far. But Sandra, yeah, it's still the same strategy, guys. This is a moving average melody. Is it the end all be all? No, I think it is simple enough that it's duplicatable. And I think duplication is still the number one thing that we should be looking for because SMT and ICT and QPT and whatever else, they have values, but I think also a lot of people are so lost in the over analysis paralysis that I know some people who are highly intelligent and unable to find an entry, and that sucks. Like to be able to see as much as they see and not be able to enter, like that sucks if you think about it. So if your brain works well on it, use it, but make sure you have a way to entry. Otherwise, I feel like JGS is a great entry method. You can use it in confluence with your ICT concepts or your Fibonacci's or your, hey, I want to look at quarter points and supply and demand and support and resistance. You can use it in conjunction with all of those. But that's just my 2 cents. My 2 cents for sure. All right, guys. Well, it is 11:13. That is all I've got for you guys. Again, I called it a couple levels, 290s maybe even, and then the weekly kickoff high is 360s. I don't know if we're hitting that. Like we could. I don't think we're going to 290s, but I would want a pop that takes out all the sellers before I try to get super excited about the sell because all the sellers are already up here. They're losing and they're losing and they're losing and they're losing. They need to lose a couple more times before the sells. And that's what I've learned about going against the trend. So I'm not trying to do it. The trend is up. So anyways, happy Wednesday. I will be back on live tomorrow. Questions, comments, wins, put them in the chat. Don't forget, don't trade what you can't afford to lose. If you're buying a prop firm, use code 6FTC. And happy Wednesday, guys. Sending you guys lots of love. Bye.